attorney Laura Anthony, founding partner of Anthony Linder and Kakamanolis, author of Securities Law Blog, and creator of the ALC Lawcast. On Friday, July 24, 2026, the SEC approved Nasdaq's rule adopting a hard $5 million market value of listed securities continued listing requirement across all Nasdaq tiers. The new rule became effective immediately upon approval without any transition or grace period. Under newly adopted listing rule 5450A3 for the Nasdaq Global Select and Global Markets and 5550A6 for the Nasdaq Capital Market, every listed company must maintain a minimum market value of listed securities of at least $5 million. If a company falls below the $5 million threshold for 30 consecutive business days, it will be delisted. Market value of listed securities is calculated by multiplying total outstanding shares of listed stock by the consolidated closing bid price. While Nasdaq already maintains standard market value requirements for issuers relying on specific financial standards, the new rule establishes a universal floor. It applies to all listed equities, regardless of whether the company qualifies under the net income, equity, or total asset standard. Nasdaq will not send informal warnings or advance courtesy notices during the deficit period. The staff monitors market capitalization automatically through daily market data. When a company remains below the $5 million market value threshold for 30 consecutive business days, Nasdaq listing qualification staff will generate a formal written staff delisting determination letter under Listing Rule 5810C1. The staff will send this letter directly to the CEO, CFO, and designated legal counsel via electronic mail and formal written delivery on the business day immediately following the 30th consecutive deficit day. The determination letter notifies the issuer that its securities face immediate trading suspension and delisting. Amended Listing Rule 5810C3C expressly excludes market value deficiencies from cure period eligibility. Consequently, staff will not generate an automatic 180-day compliance window or request a business plan to cure the shortfall. Under standard exchange rules, requesting a hearing before the Nasdaq Listing Qualifications Hearing Panel automatically stays a delisting determination. Under this new rule, it does not. Unless the hearing panel grants a rare discretionary stay, Nasdaq will suspend trading in the company's stock 2 business days after issuing the delisting determination letter. A company may still appeal the determination to the hearings panel within 7 calendar days of receiving the notice. The panel possesses authority to grant relief, though, only under 2 very specific circumstances. First, the panel may reverse the determination if the issuer proves the staff committed a factual error in calculating market value and that the security never actually remained below the $5 million threshold for 30 consecutive business days. Second, the panel may grant an exception of up to 180 days from the initial delisting determination date. They may grant it, but to receive this exception, the company must demonstrate full compliance with all quantitative initial listing requirements, including higher initial bid price and equity metrics. This standard operates as a full re-entry requirement rather than a standard cure. Furthermore, the company's shares remain suspended from trading on Nasdaq throughout the entire exception period until full initial listing compliance is proven. Listed companies are reminded that staff delisting determinations trigger immediate public disclosure duties on Forms 8K or 6K for foreign private issuers. A trading suspension on Nasdaq does not cancel the public status of the security or terminate Exchange Act reporting obligations. Instead, trading transitions immediately to the over-the-counter market operated by OTC Markets Group. If you want to keep abreast of all matters related to capital markets, please subscribe to this channel. Following the filming of this lawcast, on July 30th, the SEC received a notice of petition to review the new rule. In accordance with the SEC's rules of practice, the new rule has been stayed until the SEC orders otherwise. Stay tuned for updates.